Okay, good everyone. So today I will be doing a recap on the trades I took within a week. Then I'll also give my bias on XAUSD for next week. So most of the trades I took within a week, I took them on the lower time frame, which is the 5 minute time frame, the 3 minute time frame, and the 1 minute time frame. So I think I started taking trades from here. Started taking trades from here last week. So started taking trades from there this week. So let's go down to the 5 minute time frame. So I will give reasons why I took this particular trade. Then those trades will 8 hours. Those trades we took stop loss on Friday and on Thursday. I will also tell you guys the mistake I made on those trades that caused that stop loss. So let's start from here. Start from there. So now, see, I took this first, took this first trade. Yeah, took this first trade there using the breaker block. Okay, took the first trade there using the breaker block. And what made me use that breaker block and what made me use a 1 is to 5? So one thing you should always notice that when taking trades using breaker block or when taking trades using order block, if the breaker block is not valid, if the breaker block is not valid, you always expect price to either do a 1 is to 3 risk to reward or at least a 1 is to 5 risk to reward before you see a reversal. So that was the reason why I used a 1 is to 5 risk to reward ratio for this particular trade. The reason why I did that was because the breaker block was not valid. Because from here now, if you observe from here, price has been creating breaker structures from this, say from previous trade. But let me just start from here. So now you see price has been creating breaker structure. Price has been creating breaker structure, and each time price retest, it always go back to retest on a breaker block or an order block. So now this was the last retest price did from here. The last retest, and this retest now it's present on a order block, and that order block you can find it on the either the 3 minute time frame or the 1 minute time frame. So now after price retested on that OB, now reacted from here, creating another break of structure. So now price reacted, creating the final break of structure. So now after the final break of structure, what should you look for next? You look for a breaker block or an order block. And for the breaker block to be valid, the breaker block must grab liquidity. There must be a liquidity grab. If there's no liquidity grab, just know the breaker block is invalid. But once there's a liquidity grab, just know the breaker block is valid. So now I am using this breaker block here, but the breaker block didn't grab liquidity. And what's a liquidity grab? So I will give example of how a liquidity grab look like. So now let me go back, let me go down to the 3 minute time frame. Let me show you how a liquidity grab look like. Show you how a liquidity grab look like. Okay, from here now, you see price was creating break of structures. Say from here, say we started from here, created a break of structure. The break of structure came back to retest on a breaker block, but let's not focus on that. Let's just use the normal break of structure. So price pushed to this up, came back again to retest on the other block before pushing to the upside again, creating a break of structure. Now this break of structure now came back again to retest on a breaker block. Now the breaker block led to another break of structure. The breaker block now led to another break of structure. And what made this next breaker, this next OB, sorry, this next OB, what made it valid was that price grabbed liquidity. You can clearly see the liquidity grab here. So this consolidation price was doing here, there's liquidity there, and you see immediately price tap into the OB, it rejected. That's the liquidity grab. Immediately price tapping, it rejected. You can see the weak candlestick. Now this is the previous liquidity low. That's a weak candlestick there. That's the liquidity at that bottom. So let me indicate that using the dollar sign. So now you see immediately price tap into the OB, taking out that liquidity. You can see the rejection candle. This whole candle, immediately it tap in, it rejected back, creating wicks. That's a liquidity grab, meaning price has that's a liquidity grab, meaning price has grabbed the liquidity. You must always see that rejection. Make the price take out liquidity, then it rejects. That's a liquidity grab. So now after the liquidity grab, what you should look for next? Let's go to the 5 minute time frame. After the liquidity grab, you will always know a breaker block must be on the next high, because now price grabbed liquidity, and that liquidity grab now resulted to a break of structure. It resulted to a break of structure, and from the line where price grabbed liquidity, you will see there's a breaker block there. Let me check the 15 minute time frame. Okay, you can see it's clearly there. There's a breaker block there. This is the breaker block. Now you see price now tapped on the breaker block. You tap on the breaker block, creating another break of structure. Now this liquidity grab was the reason the breaker block was valid. That's why you see price came back, tap into the breaker block, then push to the upside, did at least a 1:9 risk to reward ratio. But in cases where you see the breaker block didn't grab liquidity, you just know price will just do like 1:3 or 1:5 risk to reward ratio. So now this is the next break of structure. Price didn't create any breaker block or any other block. That's why you see price was just in a fast run when it retested from here. Okay, when price retested from here, it was just on a fast run, meaning price was moving very fast. There's no breaker block, there's no other block for it to retest on. So it was just creating normal break of structures. Price was just creating normal break of structures, retests, just like that, normal break of structure. Up to this point, created this final break of structure. Then you see the retest again, came back again to retest on OB. So all these OB, you can spot them out on the lower time frame. Each time price create break of structure, you should always go to multiple time frames. If the break of structure, like this break of structure now, is on the 15 minute time frame, so what I have to do now, I have to go down to lower time frame now to look for the points where price will come back to retest on after that break of structure. Now go down to lower time frames, go back to lower time frame. I think 3 minute time frame, you will see the OB there. So now price was retesting. So this was the final break of structure price did. I saw this final break of structure immediately the week open on Monday. Price did the final break of structure. So on Tuesday, I opened the chart. I was looking for points of interest where price will come back to retest on, so I can get my perfect entry. So now I saw this breaker block here. So when I trace the line from where the breaker block is. I trace the line down to where the OB is, and I discovered that there was no liquidity grab. The breaker block didn't grab liquidity. It just tapped into the other block, then pushed to the upside. It didn't grab liquidity. So I just use that for a 1:5 risk to reward ratio. Use that for a 1:5 risk to reward. And you see now price tapped in, push to the upside, it didn't take profit. Then you see this clear reversal. And in the process of price pushing to the upside, it was also creating higher highs and higher lows, creating break of structure. So now price created this breakout structure here. Price created the breakout structure there at this point here. Created the breakout structure here. So that's a clear break of structure. So now this point now price came back again, breaking below that low. It broke below the breakout structure, broke below the previous low. So now this point has automatically turned into a market structure shift, telling you that uptrend is not valid anymore. Price will be like, I'm not going to that direction anymore. So now price has turned to a downtrend. Then you see I mark out this OB there, mark out that OB, and you see price came back, tap into the OB, then push to the downside again, creating this break of structure, breaking below the previous low, creating a break of structure. So after the break of structure, what next? Price will come back to retest on a breaker block or an order block. So now you can see this retest after the break of structure. Price did a retest there, so that point is the next next break of structure. So now price was creating break of structure to the downside now. So from there, price was creating break of structure to the downside from this point after it retested on the breaker block, the other block, sorry. It came back to this point, did this pullback, came down again, did another pullback, came down again for the final time. So now if you follow the trend now, you will see this was the previous high. So the previous high price did, and now you see price now came back again to break above that previous high, creating a market structure shift, telling you the downtrend is not valid anymore and price has automatically changed to an uptrend. And the reason why I took this particular trade from this point, if you should trace that line back, you can clearly see after price did this final break of structure there, after price did this final break of structure here, you know it was supposed to retest on the breaker, but since the breaker block is not valid, price just went straight up for the order block at this bottom, went straight up for the order block at that bottom. So I just mark out the order block as my point of interest. You see price came, tap into the order block, then push to the upside again. So after the market structure shift now, you see price came back to retest on this OB here. Price came back to retest on this OB, test on that OB, push to the upside, created a break of structure. Now created a break of structure. Created the break of structure there. So now that break of structure, now price came back again to tap into the order block here. Tap into the order block here, push to the upside again, created another break of structure. So all these things you must always mark them out. All these things you must always mark them out. Created the break of structure, final break of structure there. So you just have to be following the trend. So this was the break of structure for the inner structure. You know, there's inside a break of structure, there's also a smaller break of structure. So each time you're marking break of structure for a bigger trend, there's also break of structures inside those smaller trends. So you must always take note of all those things. Inside a bigger trend, there's a break of structure. Inside a smaller trend, there's a break of structure. Now you see this small trend now. This was just the small trend we were following. All this was just a small trend. All this was just a small trend we're following. All this was just a small trend we're following. But aside the small trend, this was the main trend. All this was the main trend we are following. So this was the bigger break of structure. All these lines I drew before was a bigger break of structure. Why this region here is the inner break of structure, smaller break of structure. So now you see after the consolidation, the smaller break of structure led to the final break of structure of the bigger trend. Final break of structure of the bigger trend. So now you see after the final break of structure of the bigger trend, let me go to the 15-minute time frame. Okay, after the final break of structure of bigger trend. Okay, after the final break of structure of the bigger trend. Now this is the previous low. This was the previous low. See, price now came from this high after the final break. After the final break of structure of the bigger trend, price came from this high, push down, breaking below this previous low. So now that has indicated a market structure shift, telling you this bigger trend is not valid anymore, and price has pushed to a downtrend. So now you see the retest. This was the breaker block here. This was where I missed this entry because I was focusing on the 5-minute time frame. I didn't take note of what was going on the 50-minute time frame. That was the reason I lost this entry, and we hit our first stop loss at this point here because I was looking for buys instead of me looking for sales. So now that was the first break of structure. You can clearly see this pullback, and this pullback now did not tap in to the breaker. It just ended at this point. So that is the inducement, which is the liquidity. That is the inducement, which is the liquidity. And the liquidity now is protecting the breaker block, making the breaker block valid. Because you know, for the rules of breaker block to be valid, it must either be protected by a liquidity, it must have a liquidity grab. So you must take note of those things, and it must either be protected by a fair value gap. So those three things you must take note of them. So now that is the inducement, which is the liquidity. I indicated that using this dollar sign. So now you see that is the first pullback. Price just did a little movement downward after the inducement. Did a little movement downward, then the inducement. Then now you see immediately tap into the breaker block. It rejected to tell you price has grabbed liquidity. So that's the liquidity grab, and from that point price pushed to the downside again, creating a break of structure here, creating a break of structure on this previous low. Yeah, it said that break of structure. So now after the break of structure, what you should be looking for next is a breaker block or an order block that price will probably retest on. Since this is the line where since this is a line that caused the liquidity grab, you should look for your breaker or your order block from this line here. Since this is the line that caused that liquidity grab, you should look for your breaker block or your order block from that line. So let me check on multiple time frame. So I think this breaker won't be valid. So let me check on this time frame. So I think I'll be using this. Let me check on 5-minute time frame first. So just to get that clear shot, you just have to be patient. So this was supposed to be an order block. So I'm to take, I think I'll be taking from here. I think I'll be taking from this point as my breaker block, because this isn't mitigated yet. Price hasn't tapped into it yet. So I think I'll be using that as my breaker block. So I'm expecting price now to go back to that point, then push to the downside again, creating a creating another break of structure to the downside. So this is my bias for next week. We are looking for downtrends. We'll just be looking for sales from next week. So another thing too, since price has been on a downtrend now, so I remember from my videos I uploaded on YouTube. For those that have watched my videos on YouTube, I think the very first videos I uploaded on YouTube, I mark out this breaker block. I mark out this breaker block for a very long time. I think since February, January. Mark this since January or February. So, and this breaker block now, this breaker block now grabbed this liquidity. Let me mark everything out again. mark everything out again. So now this breaker block now, it grabbed this whole sell side liquidity. See, Matic price tapped into the breaker block now. It rejected, it created that rejection, meaning price has grabbed the whole sell side liquidity. And from there now, you see there's also a breaker block there. So now the liquidity grab now has made that breaker block valid, and you can clearly see from here too, the breaker block is being protected by this fair value gap. So now they have, I think, two confirmations. The breaker block is protected by a fair value gap. The breaker block grabbed liquidity. So now this is on the 1 hour time frame. So now when I trace it back to this point here, I think price is heading, for that breaker block, since it has been on a downtrend. So I'm expecting price now to move from this point to the downside to tap into the breaker block, then reverse back again to take out the previous high. So these are the things you must always note out, you must always check for, and always try to mark all your breaker structure so you can know the next movement of the market. So and one thing you should also know is that your risk management. For my next video, I'll be talking about risk management. Your risk management, you must always use a very good risk management, because even though you are using a very good strategy and you have a bad risk management, you always end up losing your trades. You will always end up your winning trades will always end up as a losing trade. So now you can clearly see from my screen, I always use the same stop loss for all my trades, and I aim for a maximum 1:5 risk to reward ratio, or I aim for a 1:9, which most times I'm aiming for liquidity. And from last week now, you see how many trades I took: 1, 2, 3, 4, 5, 6, 7, 8. I think there's one at the bottom here to make it 9. So I took 9 trades last week, and how many trades did I win? I won 1, 2, 3, 4, 5, 6, 7. I won 7 trades out of 9, meaning I lost 2 trades. So now you can clearly see all of them, I use the same stop loss for them. So even if I'm to lose those 2 trades, I still ended up the week with profit. So that's the kind of risk management I use. I always use the same stop loss for all my trades, and I always have a reason why I'm taking those trades. So in case I lose the trades, I know where my mistake comes from. I don't just take random trades like that. I always make sure I have a reason I'm taking the trade. In case it goes sideways, I know, okay, this was the reason why this trade went sideways. So you must always take note of those kind of things too. So next week I will throw more enlightenment on the risk management I'm using. Thank you. This is all I have for today.